Hi, it's Jamie Heiberger here today talking about estate sales. I'm actually about to teach a class today on estate sales, straight from the sales office of 1 Manhattan Square, one of Extel's new developments. That will be at 252 South Street. So today talking about estate sales. What do you do when you're representing an estate and you're selling property? A couple of things to always keep in mind, very important. Make sure, number one, the person who's hiring you to sell the property is authorized to sell the property. What does that mean? It needs to be the executor of the estate or the administrator of the estate. What's the difference between an executor and an administrator? If somebody dies without a will, in order to probate the estate, you would go down to the surrogate's court and somebody has to get appointed as the administrator of the estate. That would be the next of kin. If there is no next of kin, it might be a cousin, it might be an aunt, it might be a friend. Somebody goes down, they get appointed as the administrator of the estate. Once they apply so that they can sell that property, the court will then appoint them as the administrator of the estate and authorize them to sell that property. In addition to having that authority, that's now if there is not a will. If there is a will, then the will would be taken down to the surrogate's court and you're applying for probate on the will and for the executor of the estate to be appointed. The executor of the estate would have been designated in the will itself. Generally speaking, there's going to be multiple executors of the estate. Now, once the executor is appointed, now they need permission from the court to sell the property. And what does that mean? That means that the court needs to issue letters. If there's a will, there will be testamentary letters issued. If there's no will, there's going to be letters of administration issued. Now, if you're a broker and you're getting a listing, no matter what, you want to know that testamentary letters have been issued, whether it's letters of administration or the testamentary letters, either one. You just want to remember, if nothing else, remember the word letters. If letters are issued, you're ready to market and ready to sell. If letters have not yet been issued, I would recommend holding off marketing, holding off going into contract, because you're too far away from the point in time that you'll actually be able to close on the property. Now, assuming everything, you have your order appointing the executor or the administrator, you have your testamentary letters, now you're good to go. If this is a co-op or a condo, you definitely want to contact the managing agent to find out what are their requirements to transfer from an estate. Generally speaking, what they're going to need is death certificate, testamentary letters, or letters of administration, which, by the way, they are only good for 6 months. All letters expire at the end of 6 months. Generally speaking, those are going to need to be reissued. Now, the last piece, and probably the very most important piece, is the waivers of lien. Every time, anytime somebody dies, automatically there's a lien placed on the estate. It's not something that you're going to see if you were to pull a lien search or do a title search. It's just automatically there. So that means that either on a co-op, the transfer agent will not issue new stock and lease or assign the stock and lease without having those waivers of lien. And on real property, the title company will not give insurance without the waivers of lien. So with New York, everybody who's selling property in New York State needs the New York State waiver of lien. Generally, that's going to take somewhere between 3 to 6 weeks to obtain. It can be sooner, it can be longer. Getting the federal waiver of lien a little bit different. If the sale price of the property is $1 million or more, you're going to need the actual waiver for the federal government. If it's less, you can actually get just an affidavit stating what the assets are and that no tax is due, and you can just use that affidavit and submit that together with the New York State waiver of lien, and you're good to go with those documents. There might be some exceptions, and certain co-ops or condos might have different rules for that. Condos, different of course, if it's just real property or it's a townhouse, because you're not going to be dealing with the boards on that. But nonetheless, in order for the title company to provide insurance, you're going to need those waivers of lien. Now, basically what happens is, once there's a signed contract, and these rules changed recently, in about 2016 they changed, whereby you first need to be in contract, then you would contact the IRS and asking them for a letter basically authorizing you to sell the property, which is the release of lien. Now, a couple of things can happen. The IRS might say, we'll give you a conditional waiver, and that might look something like, okay, here's the waiver of lien on the condition that when the closing occurs, the entire proceeds go into escrow. Taxes get paid when due, the estate taxes. Maybe they'll say no estate taxes are due, or maybe they're going to say that, in fact, estate taxes are due, but there's enough money in the estate that we're going to authorize you to take this property out of it, sell the property, and the proceeds will go, depending upon wherever they have to go pursuant to the agreement with the estate or under the will. In any case, always, always, always best, have yourself a New York lawyer, have yourself an estate lawyer. Make sure that estate lawyer should not be your real estate lawyer who's representing you or your client in the sale of the property. Why? Because an estate lawyer, generally speaking, may not know what exactly is needed to transfer property. And so it's always best to make sure that you're using an expert to make sure that there are no problems in your transaction. Just on a separate note, estate taxes themselves, not just the process of what goes on, but when are estate taxes due? Estate taxes to New York State are due if the estate is valued above $5,490,000. Now, in New York State, taxes are going to be due from $1 if the estate exceeds the limit. In other words, let's just say the estate's valued at $6 million. Well, guess what? Now you're going to owe New York State estate taxes from $1. That's because New York State has a cliff. You fall over that cliff and you pay taxes from the bottom. On the federal level, it's different. What the federal level has is the exemption was just increased as of January of 2018 to $11,180,000. That's actually a gift tax exemption. That means that before somebody dies, you want to utilize as much of your gifts as you can, because if you don't give it away beforehand, you're not going to get that exemption. For example, a child's buying a property, parent is giving them a gift of $500,000. When they give that gift, they file a gift tax return. They do not pay taxes on it. No gift taxes would be due until you reach the threshold amount. Anyway, net here, very important. If you're dealing with an estate, make sure you know what's been done so far, what stage it's at, and that you're authorized to conduct the sale. Any other questions? I'm always here. Reach out. I look forward to seeing you next week. Have a great day.